The Nigerian currency is known as the Naira, Nigerian Naira, and it is abbreviated as NGN in international finance and trade. The Naira is the official currency of Nigeria, one of the largest economies in Africa. Since its introduction in 1973, the Naira has been central to Nigeria's financial system, but it has faced significant challenges, especially in recent years. History of the Naira. The Naira replaced the Nigerian pound, at a rate of 1 pound to 2 Naira in 1973. The switch to the Naira was part of Nigeria's efforts to assert its economic independence after gaining political independence from Britain in 1960. The Naira has seen its value fluctuate significantly due to various factors, including economic crisis, inflation, and the volatility of oil prices, which the Nigerian economy is heavily dependent upon. Currency denominations. The Naira is subdivided into 100 kobo. 1 Nigerian Naira equals 100 kobo. There are coins in denominations of 1 kobo, 5 kobo, 10 kobo, 25 kobo, and 50 kobo, but these are rarely used in everyday transactions today. Banknotes, on the other hand, are the primary form of currency in circulation and come in the following denominations: 5 Nigerian Nairas, 10 Nigerian Nairas, 20 Nigerian Nairas, 50 Nigerian Nairas, 100 Nigerian Nairas, 200 Nigerian Nairas, 500 Nigerian Nairas, 1,000 Nigerian Nairas. These banknotes feature prominent Nigerian figures, landmarks, and symbols, celebrating the country's cultural heritage and history. Economic influence and challenges. The Naira has faced significant devaluation over the years. Factors such as political instability, mismanagement of resources, and heavy reliance on oil exports have put strain on the currency. The global oil price slump, particularly in the mid-2010s, had a profound effect on the value of the Naira. As oil prices dropped, Nigeria's revenue suffered, leading to a shortage of foreign currency and affecting the Naira's exchange rate. The exchange rate of the Naira has been a topic of great debate, especially in the context of Nigeria's central bank policy on currency control. The Naira has experienced multiple devaluations over the past few decades, and as of now, the exchange rate of the Naira to major currencies like the US dollar, USD, fluctuates regularly, often leading to a gap between the official exchange rate and the parallel market or black market rates. Currency Control and Central Bank of Nigeria, CBN. The Central Bank of Nigeria, CBN, is the institution responsible for issuing and managing the Naira. The CBN also controls monetary policy, sets interest rates, and maintains foreign exchange reserves. In response to the volatile exchange rates, the CBN has implemented several policies such as foreign exchange restrictions and currency devaluation to stabilize the Naira, although these measures have met with mixed results. The Nigerian government has also adopted policies aimed at reducing dependence on oil exports by diversifying the economy into sectors like agriculture, technology, and services. However, these efforts have been slow to show substantial results, and the Naira remains vulnerable to global oil market fluctuations. Inflation and the Naira's declining value. The Naira has struggled with high inflation rates, particularly in the last decade. Inflation has eroded the purchasing power of Nigerians, making goods and services more expensive. As inflation continues to rise, the value of the Naira decreases, further impacting citizens' daily lives. In recent years, the CBN has taken steps to curb inflation, but challenges persist due to supply chain issues, increased government spending, and the dependence on imports. The high inflation rate, combined with a weakened Naira, has placed significant pressure on Nigeria's middle class, who are often the most affected by rising costs. The parallel market and exchange rate volatility. Nigeria has also faced a significant parallel, black, market for currency exchange. This unofficial market often offers a very different exchange rate than the one set by the government. The gap between the official rate and the black market rate has caused confusion and uncertainty among Nigerians, particularly for businesses and individuals who need to access foreign currency for trade and travel. The parallel market for the naira is influenced by factors such as limited supply of foreign currency, with Nigeria's foreign exchange reserves often under pressure. The availability of US dollars, euros, and other foreign currencies becomes limited, pushing people to seek alternatives at higher rates. Speculation: investors and currency traders speculate on the naira's future value, further driving the exchange rate volatility. Government policies: the central bank's foreign exchange policies often result in higher demand for US dollars than can be met through official channels. This discrepancy between the official exchange rate and the black market rate has made it difficult for Nigerians to determine the actual value of their currency. Current value of the naira. The value of the naira against major currencies like the US dollar and euro fluctuates frequently. The official exchange rate is managed by the Central Bank of Nigeria, but on the parallel market, the rates can be significantly higher, especially when there is an economic crisis or shortage of foreign currency. As of 2025, the naira remains one of the weakest currencies globally in terms of exchange rate value. The fluctuating nature of the naira has led many Nigerians to seek alternative forms of investment, such as cryptocurrencies or foreign assets, to hedge against the devaluation. Cryptocurrency and the future of the naira. In recent years, cryptocurrencies like Bitcoin and Ethereum have gained popularity in Nigeria as an alternative to the traditional financial system. Many Nigerians have turned to cryptocurrencies as a way to preserve their wealth in the face of the naira's decline. The Central Bank of Nigeria has expressed concerns about the use of cryptocurrencies, and in 2021, it imposed a ban on financial institutions from providing services related to cryptocurrency trading. Despite the ban, Nigeria remains one of the largest markets for cryptocurrency in Africa, and the demand for digital currencies continues to rise, particularly among the younger generation, who see it as a way to bypass the challenges of inflation and currency devaluation. Conclusion: the naira is a crucial part of Nigeria's economy, representing the hopes and challenges of the nation. While it is the official currency and is deeply tied to Nigeria's financial system, the naira faces significant challenges such as inflation, exchange rate volatility, and the dependence on oil exports. The future of the naira will depend on Nigeria's ability to diversify its economy, strengthen governance, and address the challenges of inflation and foreign exchange management. In the meantime, Nigerians continue to adapt to the economic realities of the country, with many turning to alternative means of wealth preservation, such as cryptocurrencies, and seeking opportunities to protect their financial futures amidst the fluctuating value of the naira.